Welcome back, guys, to your favorite place to be. Where yesterday it might have been your most hated place to be, so we were kind of where everybody else was, curled up into a ball, hoping it would go away. And today we're obviously recovering a bit, over 25% up on some coins like Zcash, Bitcoin SV up about 16 to 17%. Now, obviously, guys, not going to sugarcoat anything. The prices dropped substantially. We're going to talk about that in this video to talk to you guys about why the crypto markets are, they're still controlled by not the United States, like we all like to think here in the U.S. Or Mexico, or wherever the hell you're at in the world, but controlled by offshore derivatives platforms that offer perpetual futures products that we're going to talk about this in the video. So basically, guys, most of the leverage positions on the longs were liquidated. So most of the leverage both ways, think of these short and long positions as leverage positions contracts that are based on the underlying crypto price itself. So if you have short positions on Bitcoin and you have long positions on Bitcoin, long position holders are trying to profit from the price going up. Short position traders are trying to profit from the Bitcoin price going down. And they also have leverage on top of these products, all the way up to 100x leverage, which is insane because of the United States. Really, like, I think 3x leverage is kind of the majority, or as high as you can go. So you have a massive amount of leveraged products on these offshore accounts, right? On Binance and OKEx and all these other exchanges. So what's happening really right now in the crypto market is, for the last couple months, ever since October, these leverage positions, and you guys can look at the data yourself, you can look at the heat maps yourself, a lot of these positions have been completely liquidated now at this point by this volatility. And I think it could only get more volatile here, and hopefully potentially opening that volatility up to the upside. Obviously, somebody that's actually holding these cryptocurrencies is kind of what we anticipate and what we want to happen. But we just don't know, right? We don't know exactly how intertwined a lot of the mechanics of these derivatives products are, because for one, 90% of them are happening outside the United States. There's no regulatory at all, meaning a lot of these orders can basically come out of nowhere. They can exist for certain instances, and then they can disappear just as fast. And what that could create, guys, is literally like a massive short squeeze on some of these derivatives products, forcing people out of those futures positions, having to buy the native asset, Bitcoin or other cryptocurrencies, even altcoins especially, because not only we have to remember that once we go offshore, guys, and there's no regulatory, we have to realize that it's not just the leveraged positions, it's the mathematics based on the spot prices with the trading pairs that only magnify this phenomenon that we're talking about even more. Because if you have a leveraged position of 100x and you have a coin like Bitcoin that's paired with thousands of different coins, then that could get pretty weird pretty quick. And that could create a massive influx in price, because people are having to close out positions and buy the native asset, causing the price to go even higher. So Binance, OKEx, and a lot of these crypto exchanges, and then you also have people like Binance purchasing Bitcoin and the price falling even more. So, a lot of these positions, guys, especially these short positions, if the price goes up, these people are going to have to close out their positions incredibly quickly, because they're not going to have the margin. They're not going to have the ability to. They're not going to have the ability to cover their maintenance, and their fees. They'll have to close the positions. They don't have endless amount of capital to extend these positions out if the price fluctuates on 100x leverage. I mean, it's if somebody's playing, if people, and it's not just somebody, guys, we're talking about people that are playing with $100 million spreads in some cases, that's tied to not only a 100x leverage market, but also they're trying to hedge with the spot price. And it's basically wiping these people out of leverage positions like overnight. Like all the long positions, guys, like I would say a majority of them, and you guys can and look more into this and report back. I mean, a lot of long positions, guys, were liquidated when Bitcoin fell just yesterday, like a ton of fucking liquidations. And what happens, guys, is a lot of times is people in these positions where they lose a lot of money, you have a completely different group that's coming about that's saying, all right, yeah, Bitcoin's going down. We need to, or crypto is going down. We need to pile into these short positions so we profit on borrowing the actual asset itself, selling it immediately in hopes that the price will go down more, pocketing the difference. And a lot of this stuff obviously is happening in the US with some of these ETFs and things like this, like BITI ticker and some of these ones that are local in the United States, but the majority of them are actually happening uh, abroad. Like a lot more percentage is happening abroad. So what we have is we have the majority of the market not able to comprehend and digest the amount of losses that quickly compile almost out of nowhere, because the price fluctuations and the amount of leverage that these people are playing with could easily snap the market in the bull market, in a bull market stance. It could also put the market in a bear market stance as well if we see the price just keep dropping and people over leveraging on these long positions, and vice versa with the short positions. If a lot of people are thinking the market's going to go down and they're piling into short leverage positions, saying, all right, I made all this money off this short position I had. I'm going to double down. I'm going to increase my leverage 100x. And these leverage positions, guys, I don't think you understand really. And hopefully you understand. Hopefully I'm breaking it down for you where you can understand. These leverage positions are causing the market, like, imagine it like a spring. All right, the market goes down, you push the spring down, you push the spring down. But as people have to offload these short positions, they're going to be forced, have to be forced to buy the native asset. And if these native assets are pinned to spot price trading pairs on the same exchange or another exchange paired with like an altcoin, like say we see a scenario where short traders are having to close their positions and a short squeeze to occur on Bitcoin, if these same trades are leverage positions on altcoins, this could be a recipe for an altcoin season that we've potentially never experienced, because we've never had this much leverage trading, even with FTX and FTT token and all these things that were happening before. It's the leverage derivatives market has grown so much that the altcoins that we're talking about here on the channel could literally raise hundreds of percents in a matter of days. Like that's what I'm trying to say. And that only fuels the fire, because you have all this pent up demand for these coins to go up as well. The actual spot price, the actual native asset to go up as well. So it's kind of like if you have a major coin like Bitcoin, top market cap coin, that's being shorted by a majority of the derivatives market, and you have the longs already being wiped out, right? The people that are shorting, once that price, if that price miraculously starts just going up a little bit, these leverage positions, they have to close the position. They can't afford to keep their position open. They have to buy the native asset. It's adding fuel to a already rapidly increasing fire. And then at that point, you have people FOMOing in, and these same orders are triggering buy order walls to break on certain altcoins, right? And you have leverage positions there as well. So now they have to close out not only the Bitcoin position, they have to close out their leverage position. And meanwhile, you have an entire leveraged market buying the actual native asset, not just Bitcoin. There's derivatives futures trading on Bitcoin SV. There's derivatives futures trading on, Neo. So this whole thing is being propped up by this illusion of a market that is now a leverage market that is coming down. And the leverage market is inverting on itself, and the longs are gone, the shorts have piled in, the short people, it's just the amount of momentum and buying that could immediately occur overnight is enough. It's very hard to wrap your head around it, guys, because we talk about coins that have the potential to go 5 to 10x, but some of these coins could go 100x, and that's kind of what I'm saying. They could go 100x based on those liquidations and the FOMO around the surface layer of what traders are seeing, retail alike and then institutional alike. Because if they know what's going on, they're able to understand the dynamic of what could push the prices there. They make money on the way up, they make money on the way down, but the real caveat is being in between where we're currently at, which is potentially a massive short squeeze in the entire crypto market that nobody is aware about. And obviously, this is my take on it. We could obviously go down. The price could keep dumping, and it could be so manipulated at this point where people are just dumping the spot price, and the short sellers are profiting on the way down. They're increasing the spot price, and they're increasing long position simultaneously. But when you start talking about the leverage that's behind the mechanics of it, if one of these things breaks, now I think the real price projections could actually be much higher than we're all currently even thinking. Like, a lot of people are thinking, oh, crypto's going down. How many people bought crypto yesterday? How many people were actually buying spot price crypto and putting it in a non-custodial wallet yesterday? Well, I could tell you there are people, guys, and that's why we've seen some resilience in certain coins like Bitcoin Cash, because there's a campaign going on over there that is, a run on the bank, right? People are in the Bitcoin Cash community are buying Bitcoin Cash. They're taking it off the exchange, and that's why coins like Bitcoin Cash also have not been affected as much as some of these other coins, because there's no account for reserves. Nobody is telling the crypto exchanges, hey, we want proofs of reserves for your Bitcoin Cash that's on the exchange. They're just it's reflective in the actual price, which I'm just giving you. Bitcoin Cash is not the only coin, right? Don't take it out of context. It's not the only coin that's experiencing this. However, this is a phenomenon that could happen. We could see a massive liquidations of shorts if the price rapidly rises in Bitcoin. This could spill over into a lot of cryptocurrencies that are pegged not only algorithmically to Bitcoin, but mathematically with algorithms pinned to Bitcoin. And this could overflow into an exploding market based on a massive short squeeze. And we'll just have to see. Obviously no guarantees, but it's possible. So drop it in the comments, guys. Let me know. We'll have some update videos. I know people want update videos on specific coins. I am taking note to that. So I will be updating you guys on specific coin prices into the evening tonight, and then into the weekend. Expect some more videos about the unfolding crypto phenomenon that is currently underway. All right, you guys take good care. Happy Friday. We'll see you soon.